Hello, folks. So, welcome back. This is Gene, and what I'm going to be covering today is our application series. So, basically, what application series is, this is where you apply all the concepts on a higher time frame standpoint. So, what I'm going to do is I'm going to show you guys how I apply all these different concepts that you guys are all being taught from using the monthly time frame to the weekly time frame and also to the daily time frame, utilizing all the concepts we've covered so far on our higher time frame analysis and showing you guys out by simply utilizing the daily time frame, same time frame the banks execute on. You can really get good moves and a macro view of the market. So with that being said, let's get down to today's session. So what I decided to do is I'm going to do a 6 month review whereby I delineates a month by each week, and then we can then forecast what we expect price to do every week. So what I simply did was I went back to the first month of January, and so for those of you guys who might contemplate if Gene actually has gone through this price action before. So the fact is, I just selected a year at the beginning of any year, and I came up with 2017 to um, show you guys how to apply this concept. So oftentimes we might be wrong, okay, and that is acceptable because in trading you want to accept being wrong so that we can learn. Okay, so I'm showing you guys raw how I would look at the charts without looking at past price action. Although while I was trying to select the replay button, I might have seen what price maybe did. Maybe I might have had a quick glance at what price did, but then I can't really remember what price did. Okay, so what I'm doing here is just raw, just analyzing. That was what I wanted to do, just to get out of the way to show you guys how I look at the charts from a higher time frame standpoint, just simply utilizing candlesticks, ranges, IPD, and all that to solidify where I expect price to do. So what we're gonna do is every month we're gonna do month by month until we get to June, which would bring our higher time frame series to a close. All right, so the internal charger is four pairs: DXY, Euro Pound, Euro USD, and Pound USD. Now, DXY we know is the major pair in the currency market, which is the US dollar. And now you can also see euro and pound. So now the reason why I'm referencing the euro pound is for euro strength on fiber and pound strength on cable. Okay, so the euro pound is kind of like the what you want to reference for euro or pound strength. All right, so what I'm gonna do here is for the next or for the entire month of January in this section, I'm going to cover four pairs: DXY, Euro Pound, and Euro Dollar and Pound Dollar. So with that being said, let's get down to today's section. All right. So sorry if my mouth is all mushy. That often happens when I've barely taken any water and my mouth is very dry. So please bear with me and hopefully you get the value I expect you guys to all get from this content. So with that being said, let's get down to session. Okay, so what you always want to do is you want to start from the monthly. Okay, so you want to go to the monthly and identify where am I at on the basis of the monthly time frame. Okay, so that is the question you want to ask yourself. Right, so now utilizing premium to discount array. Okay, so taking a cue from our PDRA concept, remember I said there's nothing such as a true support resistance. The only thing you have in the market is expensiveness or cheapness. Right, so now looking at this price leg on the basis of a monthly, all right, we can see that this is a range high to a range low, and this price leg is inside of this range high to range low. So what we simply do is we drop our ranges and identify the range high. I pull up an horizontal line to get the range low. Okay, then we want to identify the midpoint of the range. So anything below the midpoint, we consider that discount. Anything above the midpoint, we consider that premium. Okay, so premium where you can expect some sales to come in the marketplace, then discount where you can expect some buys to come in the marketplace. So this is our discount level on the range. Currently, we can see price broke through equilibrium. Okay, so sorry, this is the midpoint of the range. Okay, we also call that equilibrium or mean threshold. Anything below this level, we can look at that as a zone for buys, just like saw the market value off this level. And inside this zone, we could potentially look for sells. All right, so now the next question we gotta ask ourselves is, where is the market currently at in terms of any institutional reference point on this range? Okay, so the institutional reference point on this range is a little fair value gap as uh, relative. Okay, so any analysis you're doing should be relative to where current price action is at. Current price action CPA. Any analyzing or analysis, sorry, you're doing should be relative to where current price action is at. You don't want to analyze all this entire range, but you know it could take about 4 or 5 months for price to get to this range. Or you don't want to start analyzing all this range below, when you know it could take about 3 or 4 months for price to get to all those ranges below. So you want to look for levels relative to where current market price is, which is this level. Right, so what we can identify on the premium basis is this fair value gap on the monthly. It's a little fair value gap on a monthly basis where price just tapped. Okay, so let me point out that fair value gap to you guys. So that is this candle's low. Let's zoom in so we can find this level. Okay, so this is this candle's low, this candle's high. That is a fair value gap. Also, there's a support line around this level. So this line acts as support in price, which is an old low in the middle of that fair value gap. All right, so let's extend this line out. And in terms of a monthly basis, you can see how prices perfectly tap that old low. So you could kind of expect some form of bearishness to come into the marketplace, even though it might be short term, okay, but you can still expect some form of bearishness to come into the marketplace. Because currently now we are in a premium market. Remember, there's no such thing as support resistance. There's only discount and premium. So currently now we're in a premium market, and then there's a very, very far range away. After this level, there's nothing really to reference until we get to all the zone. Okay, so we could expect a form of retracement or reversal potential to come around the zone. We don't know for certain, but could expect a form of retracement to come around this point. All right, and then our bias would be that should price break 103.62 to the upside, then we could look for potentially price taking out this highs. So we're gonna set that level there. Okay, so 108. If price sticks at that level, then we know we're now bullish and looking for 108.03 as an upside target for price to reach for. Now, the reason why I'm not using this bearish candle is because this fair value gap already falls in line with this bearish candle. So I feel if price sticks at this level, price is definitely going for this clean ice. And that is the body of this candle. All right, so 107.15. Now, if you're dealing with higher time frame, make sure you take note of this. You always want to round up to the nearest round figure, nearest institutional price number. That is the 50s, the 5s, the 0s. Okay, you always want to round up to the nearest institutional figure, especially if you're dealing with monthly, weekly, or daily. If you're dealing with smaller time frames, you don't necessarily need to do this, but if you're dealing with a higher time frame, you always want to round up to the 5s or the 0s. Right, so should price take out this level, in terms of an upside basis, this is where we're going to want to reach for. And then on a downside basis, okay, downside basis, price just tapped this last high. So we can't really look at that level as a support, as price has respected that level and shown the reaction of that level. So I believe should price get back to that level, for any reason, if you see any sells in the marketplace, we're going to break through that level and just keep trading lowers. But we could use this level as a good concept point to expect price to reach for on a short-term basis. But I also want you guys to pay attention to this very clean body candles at this point. Okay, very clean body candles at that point. That is a monthly rejection block. Okay, and look how those candles wick have reacted off this level. All right, so this candles wick has reacted off that level, so we don't really want to see the market get back down. Or if the market gets back down to this level, we don't really want to see the market react off this level, as the market has already reacted off that level before in the past. Okay, coupled with the fact that there's equal body candles there, very clean equal body candles. Obviously, there's going to be some level of fund liquidity resting below that point. So I'm gonna type this monthly fund liquidity. Okay, so let's reduce this font monthly. Okay, so monthly it changes to a 10. And okay, so monthly fund liquidity around that level. And now what we want to do is we go to our weekly time frame, switching from our monthly to our weekly. And you can already see we have our 4 month delineated. So at the end of this line, that brings us to the end of January's trading session. So make sure you guys are taking note. Right, so now on a weekly basis, we can see the market has reacted off this last high. Okay, market has reacted off that last high. So what can we reference in terms of a weekly? So we can narrow this point, the monthly zone, to this level. Okay, so we can narrow the monthly zone to that level. What else can we reference in terms of weekly? So monthly fund liquidity rests below that point, okay, which is this candle. So what can we look for in terms of weekly? There's a weekly swing around this level. Notice how clean these equal body candles are. So since this zone, this monthly support zone, falls in line with this weekly rejection block, what I'll prefer to do in terms of a downside target objective is to move price or the line to that weekly rejection block. Okay, so that weekly rejection block would be my first target. Should we see any form of downside, and should we see any form of upside, 107.50 will be the next target I'll be looking for in terms of an upside. Right, so what else? So this will be my first target on a weekly basis. Clean body lows. Okay, so that is a weekly rejection block. So we label that weekly rejection block. Okay, so weekly rejection block on this level. And obviously, this last week's low, any fund level liquidity resting off that level constitute sell side liquidity. So type in sell liquidity as a potential target objective for price of this level, sell liquidity. Okay, so now there's a weekly support in terms of this bullish order block. So we're gonna put a line here. So that is a weekly support, right? Should price tap this level and break through this level, we know that we're going to reach definitely for that downside. Okay, so this is how you want to begin to form biases. You want to create an if and when scenario, right? A when and if scenario. When price does if price does this, I'll do this. Okay, and now that works. Sorry, I think I got that all mixed up. But anyway, you get what I'm saying. You get the point I'm trying to make, right? So if price does this, I'll do this. If price does this, I'll do this. So what you want to do is you want to play out all possible scenarios and get yourself prepared for all the scenarios. Should price break this level, I'm going bearish for this weekly rejection block. Should price respect that level, I'm going for 103.62 as a potential upside target. Should price break that level, we know where we're reaching for, more upside target. Okay, so that is what you want to do. That is how you want to view the marketplace. Okay, so all right, so now we switch to our daily time frame. Then we begin to modify. Now we know price is reacting off this fair value gap, so we don't necessarily need this. Anyways, what else? All right, so this monthly zone is still far away relative to where current market price is at. So we don't necessarily need this for now until price begins to trade to that level. So we can eliminate that because we don't really need that for now. So this is the midpoint of the range. We don't necessarily need this also. So what we want to focus on is this block of price action at the zone. This zone of price action. So now let's see what is price doing. Price is reaching for a daily support. Now, the next thing you want to do is you want to pull up your IPDA ranges. Okay, so what I'm basically going to do is I'm going to get a range. So I'm going to bring a date range from the 2nd of January, and then we'll extend this out. This is our 20-day IPDA, right? 40-day IPDA and 60-day IPDA. Okay, so next phase we're going to do is we're going to draw an arrow from current market price to 20-day look back. Okay, also going to draw an arrow from current market price to the 40-day look back. Also going to draw an arrow from current market price to the 60-day look back. So this is perfect. 40-day, okay. 60-day. So sorry the charts looks all messy. Clean this up right now. This is what you need to do when you do your analysis of your levels. So cleaned up, okay. So all cleaned up. Okay, so we know this is what we're looking for in terms of. So we don't really need this level below. So this is our 20-day IPDA, right? 40-day and 60-day look back. So what we want to do now is we want to identify where is our 20-day low. Okay. So our 20-day low comes in form of this weekly rejection block, where we identified our weekly rejection block. So we can narrow this weekly rejection block to a daily zone right now, because this weekly rejection block is this 1, 2, 3 candles. So you can remove this off. This is how you begin to get precise with your levels. Okay, so you put this on a daily basis, and you can use a horizontal ray. This equal body candle will be our first target, and we can put sell liquidity around that level. So sell liquidity on that level. So this will be our sell liquidity on that level. Right. So remember, our first week starts January. Okay. And obviously this will be buy liquidity around that level. So what I'll do is I'll simply move this IPDA arrows down and move this down. I'll move this also down. So we have liquidity resting around 103.62. So I'm going to put that as a buy side liquidity. But let's just use buy liquidity. That is way easier. So buy liquidity rests around that level as a daily order block off that level, which is indicated by the zone. So now we can play out the different scenarios in the marketplace. Okay, so let's get down to Euro Pound. We do exactly the same thing for Euro Pound. So you go to the monthly time frame. Now you don't necessarily have to do all this analysis every single day. Okay, once a week, this is what you need to do. Once price makes something on a weekly basis, then once price makes a very, very drastic change for a week, then okay, I need to probably consider my options on the larger time frame, such as the monthly. But once you get your levels all marked out, oftentimes it can take price a while for price to get to those zones. So you already know what the market is going to do in anticipation. All right, so now you can see your pound is evidently bullish, right? Price is respecting support. Price is respecting support definitely. So we're evidently bullish on Euro Pound. Okay, so right, so there was equal body candles there. That's what European is giving us. Rejection block, come with a rejection block. Price quickly pulled off that level. Our next level in terms of support is this low. That is our monthly support. So we have two monthly levels, and then we have a monthly order block, bearish order block of this level. So let's make this smaller. All right, so monthly order block of that level where price could reach for as potential target. From there, we'll go to our weekly range. Okay, so from there to our weekly range. All right, so now also want to determine where we're at in terms of a discount or a premium area. So now this is a range, right? Price made a range high to range low, and now price just broke out of that range. So now the next question is this a potential turtle soup? Okay, this is zone at which price broke out of the range. Is this a potential turtle soup for price to reach lower, or would price just keep that bullish trend and keep going higher? That is what we got to consider in the marketplace because now we're out of this range. Okay, so we can't reference premium or discount relative to this range. Okay, and we even just took out this last high. So it seems like we're creating a new range, right? So now we got a reference. Could this be the potential high of this new leg in price, or does price still have more momentum to keep going higher? Okay, that is what we need to consider in the marketplace. Okay, so from the monthly, we're going to switch to the weekly. Okay, so I don't know why this is acting up. Right now, so the weekly time frame, weekly. Obviously, you can see this monthly bearish order block came in form of a weekly bearish order block. Right, so we could look at that level as a zone for bearishness in the marketplace. And also, I want you guys to consider this level. Okay, this weekly level, clean bodied candles. Price just took out that level. So sell side liquidity has been grabbed. So could this be a potential total soup for price to trade higher? That is the question. Could that be a potential total soup for price to trade higher? I don't know why my laptop is disconnecting off my Wi-Fi. Something is definitely wrong. I think this should get fixed. Let's get this fixed. Wi-Fi is still connected. Something is wrong. Let's see what went wrong. Probably just a Wi-Fi lagging. So I'm having unbearably tough time with my Wi-Fi currently. I don't know why this is going on. Okay, this is still loading. There's actually something wrong. So I'm gonna ask you guys a quick favor. Can you guys give about a minute? Let me get this fixed. Okay, I promise in a minute I'll get this fixed. Then come back to what we're doing. Okay, so about a minute, then I'll get this fixed. Then we'll come back to what we're doing. I think we're fixed now. Let's see the results. We're fixed. We're fixed. Okay, we're fixed. And our analysis is all done. What a wow. So let's do this. Let's get our replay tool back. Okay. I think this still stands. Is yours still stand? This pound yours is still stand. Let's see. Let's see. Hopefully the replay tool still remains. Oh, everything all cancelled. Really? Really? Everything cancelled. Wow. Okay, so price action concept. We're looking for euro. So sorry for taking your time like this. I don't know what actually went up with the connection. Trying to get this fixed. I'm trying to get this fixed. So what I'll probably do is close tabs, create a new tab. Okay, so chart. Okay, so we're back. So let's get back to euro, dollar. I think it was around this month. So we're gonna use a replay tool directly on that line. Now, why do we have a? Oh, this is actually September. I'm looking for 2017. So the first week of 2017, January, put that line there. Put a line there. Okay, so we made a mistake. We'll set it up, set that up. Then one more tab, trade pound, dollar. Okay, so pound, dollar, we set that up also. So remove all drawing tools. We go to the first month of January on a weekly basis, 2017. We look for 2nd of January, and we'll put our replay tool right there. Okay, so I think we're all back. We're all set for euro and dollar. So continuing with our analysis on euro, pound, let's get to the weekly actually. So I think we're at the weekly. Right, so I want to point our attention real quick to the liquidity resting below at the weekly. Okay, so liquidity rests below at the weekly via this clean body candles and this candlestick low. So look how this candle traced through this level. So you know obviously there's gonna be a level of stop resting around that level. So now the question is, we just ran our sell side liquidity. Will that be a catalyst for price to move higher? Okay, will that be a catalyst for price to move higher, or will price want to come back down and fill in this fair value gap in the marketplace? That is the question we're going to ask yourself, and we're going to weigh in the different factors, okay, as regards to where we're at currently in the marketplace. Okay, so we have weekly order block off this level. Okay, so we have a weekly order block of that level. So now we want to begin to get to our IPDA ranges. Okay, so we want to get to our IPDA ranges, and let's see. We pull up our tool, date range. Okay, so we want to mark up the first 20 days for the 20-day look cast back, the 40 days for the 40-day cast back or look back. Okay, sorry, then the 60-day. For the 60-day look back. Oh, yeah, 60-day look back, and that brings us to this. So bring our arrow to toolbar, and then we draw lines from here. 20-day look back. Draw the lines from here. 40-day look back. Also draw our lines from this level as our 60-day look back. Then we delete this, delete this, delete. So we have 3 levels to reference in terms of IPA, which is the 40, 60, and 20-day. So now, the next question is, where is our 20-day reference point? Where's our 40-day reference point? Where is our 60-day reference point? So if you trace all this down here, this is our 20-day low of this level. There's no 20-day high to reference. Okay, so our 40-day high slash, yeah, so our 40-day high, this is around this level. Price basically just took out that level in terms of an upside. So now the next question you got to ask yourself is, on a in the basis or on the basis of a range, where are we at on this range? Just remember, we checked the monthly for the monthly range, right? So now we check the daily for its own range, and then we find where we're at relative to the positioning on the range. Are we at a discount or are we at a premium? Okay, so what you can simply do is you identify your range high, your range low, pull up your Fibonacci tool, get the midpoint of the range, and you don't want to use the wicks. Okay, you want to use the bodies of the candle, the bodies of the candle. All right, so this is your midpoint of this range. So far, we're still below the midpoint, so we're in a discount range. I could expect bullishness, especially off the heels of this turtle. So you can expect some form of bullishness to come in the market. But now it seems like price just took out a level of liquidity around this point with this very big bearish candle. So we could potentially see price reach back to the bottom of this range. But overall, I'm bullish currently on Euro Pound, but we could see a short-term correction, either to take out this low one more time or to trace into this other block before we see a move higher. So with that being said, we identify the last down candle for this move up. That would be our bullish order block. Now there's a kind of like fair value gap between this candlestick's low and this candlestick's body. So we put this candle here. So that is a fair value gap. And then we also put this candle to reference our order block. So that creates a sort of zone whereby we can expect the market to retrace down into, and we can see bearishness in the marketplace. So we do it this way. Okay, so now your USD, you want to do the same thing you did on DXY. So there's nothing really to reference in terms of a monthly, as price is very, very way low at this point. Okay, well, let's check the monthly. We could see something to reference. So on a monthly basis, there isn't really much to reference on a monthly basis, except this was an old high back here in the monthly. Okay, that was a level where price showed a nice direction off that level. It's a nice direction off that level. So other than that, just nothing really much to reference. But on the monthly basis, basically we could see that there's a level of resistance there on the monthly. So you could pull up a horizontal ray, drop that line there, and round it up like I always do to a round figure like 1.5. Okay, that is a very, very good figure. And you could also pull up this low. It's kind of 6 low. Okay, and then we can shift to the weekly. All right, so one more thing to identify levels on the monthly also. Gotta take note of our monthly bearish order block, which is this candle right here. It's monthly bearish order block. This is candle. What else can we reference? So that is all for the monthly. Now we shift to weekly. Uh, now I want you guys to pay attention to what price is doing. Okay, because oftentimes now you can take note on what I'm about to say now. So oftentimes you're gonna see price. What the DXY does will be mirrored on Euro USD. So oftentimes if you're confused about what the DXY is going to do, then just check the fiber. Okay, so if you're confused about what DXY would do, check fiber. Oftentimes, if you're not really sure about what DXY is doing, you want to look at fiber to complement your bias on the DXY. Okay, if DXY is bearish, fiber would be bullish definitely. Most definitely, fiber is going to be bullish. So if you're confused about what the DXY is doing, simply check the fiber as 80% of the time fiber, or sorry, 85% of the time, fiber mirrors what the DXY does. Exactly what the DXY does, fiber mirrors that. Okay, so now what we're seeing from fiber is price basically came to this last swing low and dipped down below and pulled up. Now, if you know what I teach, when I teach turtle soup setups, basically, which is a kind of setup where price makes a stop run off a level and quickly reverses off that level. What I do say is, if you want to know if price is ready to go through a level, you want to see a lot of selling power. For example, if it is a sell side liquidity, if you want to know if price is going to go lower off a level, you want to see a lot of selling power of that level. But now you see a situation whereby price shows a kind of breakout and quickly pulls back into that range. More likely than not, that is a turtle soup. Okay, so this could be a potential turtle soup on our hands, and if that is the case, that would mean DXY would be bearish. Okay, we can assume a bearish bias of DXY. Okay, then we move to our daily. Obviously, there's nothing really to reference in terms of the weekly, except for there's nothing really to reference in terms of the weekly. So we simply switch to the daily time frame. Now we ask ourselves, on the basis of the range, where are we in terms of premium or discount? Obviously, we are at the most discount price point on the range via the turtle soup. Okay, we are the most discounted price point at the range. So if we're looking at considering for the okay. So if we're considering this level as a potential turtle soup, we want to see price trade back to the midpoint of the range. Okay, so simply pull up a Fibonacci retracement from the high to the low, and then this would be a midpoint. So if this setup becomes a valid setup, we want to see price reach for the midpoint of the range on a swing basis. So this could present a swing opportunity for us as traders. Okay, so on the swing basis, we want to see price want to reach for that level. All right, so now going to British Pound USD, we check the monthly. Let's go what price is doing on the monthly. So there's nothing really to reference. This is the lowest price has ever been. Okay. So if that is the lowest price has ever been, tells you that tells you that the British pound has been a lot more weaker than euro dollar. Okay, because notice whilst the British pound was dropping massively, euro was still stuck in a range. That tells you euro was way stronger than the British pound, as reflected by euro pound, where we can see the strength in the euro. Okay, so now getting back to British pound, we're gonna look for levels in terms of premium and discount, because this is the lowest price has been ever on pound USD. All right, so in terms of a premium level, we look at this, an old swing low. Okay, that is the first premium level. Basically, we're gonna attack. The next up would be this window. Okay, that will be the next level price will attack. Now, obviously, in terms of a discount level, this will be the last swing low, the last reference point on the discounted basis on the monthly time frame, because simply there's nothing below this point in the market. So we go to our weekly time frame, and then we can begin to narrow down zones and levels in price. Okay, so from the weekly, we can begin to narrow down zones and levels in price. So I want you guys to pay attention real quick to these equal body candles on the weekly. Right, so equal body candles on a weekly basis around this point. Equal body candles. So we can put a potential X around that level, as price could potentially trade into that level, and then we could label this a weekly rejection block. Weekly rejection block. Okay, so weekly rejection block off this level. Also, there's also another weekly rejection block of that level. So these are short-term targets or swing targets on British pound USD. And obviously, we want to narrow down to a daily to find daily price levels where price could reach for. Obviously, you can see this very clean level. That could be a level for sell side target. And then in terms of this range, right? So there's a range whereby we have a range low to a range high currently, and then the trend currently is bearish. So until we see something otherwise, we simply stick with the trend. Okay, so this is all the analysis you need to do on these four different pairs. This is the way I will look at the market. Okay, so remember, we don't start trading until price crosses the 2nd of January. So what I'll do is I'll slow down. We'll play buttons. Let's see, everything's all slowed down. Perfect. So we're ready to go. Let's go. All right, so this is the first day of the first week of January, which is the 2nd of January, and we can see price making a bull move. Okay, so let's play one candle forward for the same pair, euro pound. Okay, now price taps our level. Euro dollar, let's see. So zoom in into what we expect euro dollar to do. Price just took out this low, basically. Euro dollar. Okay, so we could see some form of retracement. The XY went bearish. All right, so euro dollar went down. Okay. Oh, let's see. So this is actually, I think we went one step ahead. Euro dollar. This is actually 3rd of January. Anyways, still stick. So euro GBP USD is lagging behind, and let's see what GBP USD does. Okay, so bearishness, perfect. Now the first day, which is Monday, 2nd of January, 2017, we saw bullishness. Now the next question we're gonna ask ourselves is, so what are we looking for in the marketplace? Obviously, we're at a premium on the DXY. Okay, we're looking for sell side liquidity, but also if price dips into the zone, we could see buys. But I want you guys to notice how clean the body of these candles are. Okay, so what we could potentially get is a turtle soup off this level and a deep back into the zone. We're looking for bearishness. Now to validate our turtle soup, we want to see price trade through this level and quickly pull back into the range. If price trades through that level and does not quickly pull back into the range, then that is not a turtle soup, that is a breakout. Okay, so currently my bias is a short-term bearish because we're at a premium level. We're just holding a monthly gap We tap a monthly low too. Okay, and Euro USD confluence that with the DXY basically just made a turtle soup of a very large trading range. I'm looking for bearishness unless price break through this low cleanly. Otherwise, I'm still bullish as there's a lot of upside and we're at a very discount price point. So with that being said, let's play it forward. So currently now no execution on the DXY. Okay, we're not looking for any execution on DXY. We're gonna wait for Tuesday's candle because the next candle is gonna play off is Tuesday. So we want to see what Tuesday's candle will present to us. Right, so Tuesday's candle tapped through this level perfectly. Okay, so remember our analysis was if we see price tap through that level and quickly pull down below, we could look for potential shorts as there was buy liquidity here and those liquidity has just been grabbed and the market basically pulls back into the range. So check Euro pound. Remember this was our level to expect bullishness off. So we could see potentially bull move off this level. See bullishness of that level. So let's see what Euro pound presents to us. Okay, price showing that it's stalling, no real change. Obviously, Euro pound came off this level. We've played this forward already, and so basically price started to a daily low in Euro dollar. So we check GBP USD. Obviously, if DXY is going to go bullish, then want to see GBP USD go bearish all the way down into that zone, potentially through that zone. And if price breaks that level, we can look at this level as next downside target. Okay, that level could be next downside target, British pound. All right, so price still maintains that level, never trades higher, still maintains that level. So no change in price currently, but we're still looking for that short-term bearishness. Okay. Right, so now DXY makes this level. Now we could actually trade it. So if we're going to trade, remember our weekly range pattern. The high of the week is most likely to form on Tuesday/Wednesday. So this is Tuesday, and price just made a run through buy side liquidity. Okay. So for Wednesday, we could expect bearishness, very big bearishness in the marketplace. Can expect at least a weekly target, sell side target to be this zone. Okay, so I want to see price take out 102. So put a arrow line around that level. 102, as you see these very clean candles, there will be some liquidity resting off that level as people who are in this very long-term buy move would want to trade your stop losses 222 tap. So our first sell side target will be off this level for DXY. Your British pound, you can see price trade through this level as price is showing signs it wants to trade higher as we're in a discount level. So if you actually wanted to trade British pound, okay, you would be buying or you would be looking for Euro strength. Okay, so you're looking for Euro strength and DXY is going to be bearish. Okay, we could see Euro make a pullback off this level. For when is this price action? We could see Euro make a pullback of that level. And GBP USD. So now, currently, I'm not really comfortable with pound USD being off, just maintaining at this level. Okay, because there's obviously some level of liquidity below this level. So I want to see GBP USD trade lower to the downside. So that would make me revalidate my position on the DXY and Euro pound, Euro dollar. If there's still a lot of sell side liquidity, let me put it here. Okay. So let's type this out, sell side liquidity or sell liquidity. There's still a lot of sell liquidity in the marketplace, which British pound hasn't activated yet. And Euro just went and tapped his level, and there's nothing to reference in terms of sell side targets. Okay, and DXY just tapped this level. That could mean that if DXY is going to make a pullback from here, I want to see GBP trade down. If you want to see pound USD trade down and Euro USD trade higher, that could mean that Euro pound will be very bullish because Euro USD has no range to the downside to fulfill. British pound USD has a lot of range to the downside to fulfill. That could mean that Euro pound could be very, very bullish and the DXY could be moderately bearish. So we could see maybe a doji or even a small trading range in DXY due to the fact that pound USD has a lot of range to the downside and Euro USD has basically met its downside target and could see a pullback higher from there. So these are our biases going into Wednesday. Let's see what price does. All right, so we saw bearishness from this level as we expected of the DXY. Let's see what Euro Pound did. Remember, we're looking for a very explosive move. If we break through this level, then we could reach for these lows. If we maintain this level, then we're looking for a very big move due to the range of Euro USD and British Pound USD, basically. Okay, so we're expecting an explosive move. Price maintain the level. Still cool. We're looking for bullishness of Euro dollar. Let's see where Euro dollar presents. Okay, bullishness of that level. Still looking for bearishness, looking for more downside. But if we maintain this level, well, that is okay, right? As long as we do not break through this level, I'm still looking for a downside. All right, so price look like it has taken out that level. Now it is time for us to be to reanalyze, okay, our stance on this certain pair. So if you're actually trading this on this day, you would have been wrong on British Pound USD. You would have been correct on Euro USD. You would also have been correct on Euro Pound, albeit we got a very small range, and you would have been correct on the DXY. So we're looking for a continuation into downside target. The first downside target is this level. Next downside target is that level on DXY. For the Euro Pound, we're looking for more upside target. Basically, we're getting to the zone. And the next zone to reference in terms of upside target would be this level where we have our 60-day highs resting around. So those 60-day highs resting around would be a good level for profit taking, okay? On the upside, Euro USD has a lot of range to achieve on the upside. So we can see higher prices into this zone, which is 1.06323 for Thursday's price action. Also for Thursday's price action, we'll still potentially see more range to the upside, but I still feel like there's a lot of sell side liquidity to the downside that price hasn't really achieved. So I would probably stay out of British Pound USD until I see that downside target met, or price on Thursday shows me something different. Whilst Euro USD, I'm looking for more upside. And if I'm still expecting that downside, I feel like we could see a very explosive move on Euro Pound on Thursday. So now let's see what the market does. Note that this is Monday's price action, Tuesday's price action, Wednesday. So the low of the week came on Monday on Euro Pound. Unless we break that level, which is Monday's low, it's still bullish on Euro Pound. All right, so let's see what DXY does. Bearishness. Okay, so we met our level precisely, but a precision. So price gets to our level precisely, and a first sell side target achieved, next sell side target achieved. Wonderful. So if you're trading on Thursday, remember it's Euro Pound wanted to trade for upside. So that could mean our bias was actually correct on our Euro Pound. More upside on Euro Pound. Oh, sorry. So if this went very bearish, want to see very bullish prices on Euro dollar, and this went very bullish on Euro Pound, that would mean we're going to see more strength on Euro dollar than British Pound dollar. And look how precisely price taps our level. Price gets to our level precisely. Okay, so I think one more thing I failed to do was to identify the PD, sorry, not PDRs, the IPD data ranges. Okay, so we get to date ranges. So we do the 20-day, 40. Okay, so what I'm doing is simply rounding this up to the nearest date figure. Okay, 60. So some of you guys might ask this question: Why, Jin? Why did you round this up to 39? Because sometimes the broker might print Sunday's candle, sometimes it might not. So what you want to do is you want to round it up to the nearest figure closer to 40 in terms of range. If you can't find 40, okay, date range. You also want to round this figure to the nearest to 20. Okay, so rather than choosing 22, you want to use 19. Right. Rather than choosing 42, you want to use 39. Because 39 is closer to 40 than 42 is. So we get this as a 40-day cash back or look back. Okay, look back phase, 40-day this. So we delete this, delete this, delete this. So basically the week ends on the 6th. Okay, 13th, 20th, and 27th. Right. So basically this is our 20-day IPDA high. So you can label this 20-day IPDA high, 20-day IPDA. That is why I want to see price get to that target. Because remember, the hedge funds trade or trail their stops based off 20-day IPDA ranges, meaning IPDA lows or IPDA highs. Okay, these are 20-day IPDA high, and this is a 40-day IPDA high. Okay, 40-day IPDA. So once we break through this level, then I'll be looking for this level as next upside target in price. All right, so our target is almost met on euro dollar, and we go to British pound. Basically, we're staying out of British pound as we wanted to see some measure of downside on British pound. Okay, so we saw bearishness on British pound as we expected. So that could mean that we could reach for this level. Okay, and on DXY, so basically we traded on Wednesday, we traded Thursday by trading strength on euro. Okay, so on Friday, we could see a potential retracement of this level, or we could see price to trade down for reach down for 100.90. But for Friday, I'd rather prefer we sell out of the marketplace and we sit by the sidelines. It's better we sit by the sidelines as we've gotten a very nice move off euro. Okay, so what I'm trying to do is I'm trying to show you guys how I will trade on a normal week off a daily time frame. All right, so euro pound, basically we're at this level where there's massive liquidity resting. So I feel like price could trade through that level to grab liquidity and pull back. Okay, so that is what price could do. So on a short term basis, you could buy into this equal highs, okay, of that level in euro pound. Euro USD obviously was staying away from euro USD, but want to see price at least tap weekly target objective before making any sort of pullback. And British pound USD, want to see British pound USD reach for this weekly rejection ball. So let's see, currently DXY indecisive. We're staying out of DXY. Okay, it's expected. Euro pound, want to see Euro pound trade higher into those zone as expected. Tap first zone, tap second zone, so we're correct. Price analysis. Wanted to see price at least tap our level. Okay, as our target. Let's see if price actually tapped our level before pulling back. So price fell very, very short of our level. That is okay. A lot of pips were still made from Tuesday actually to Thursday, which is about 216 pips. That is actually a lot of range. That is a lot of range. So British pound, US dollar, want to see more downside into that level, and we've met our target. So we're precise off this level, British pound USD. So that is basically the complete analysis for the first week of January 2017. Now we're going into the second week of January 2017. Okay, so now with fresh week, we don't really need to reanalyze sorry anything in the market, as basically all the levels we need to identify in the marketplace has all been marked out. So we don't really need to check for any new levels in the marketplace, as we already know our levels from the previous week. So all we simply need to do is uh, ask yourself, what could price potentially do the next week? Okay, so now this is also another notebook taking moment. Okay, notepad moment. All right. So whenever a price wants to make a significant move, oftentimes you're gonna see a sub run of a level. For example, look at this level, this significant swing though. Look how price ran through that level, and look at the result of price off that level. Okay, before price made a reversal up to this level, look at this week taking out these equal bodied candles before price went up. Okay, so basically before you see any major swings in price, you're going to see an aggressive stop run through a level before you see any major swing in price. So price basically coming back to take out this buy side liquidity tells me that we could be reaching for the opposing end of this range. So now the next question we've got to ask yourself is, uh, where is our PD array? All right, so there's a small daily range around this level. Currently, we're still in a premium market because we're above the midpoint of this range. So we could still expect sells into a more discount price point, unless if price trades through these rejection blocks. Okay, this stop run basically I feel is a catalyst for us to get a bearish move. So that is what I feel will be a catalyst for us to get a bearish move. That stop run. Right. So for Monday, I want to see a retracement into this level on DXY. Okay, and to find bearishness of that level into this next level, because now we've tested this level, so we can see a retracement down into this level. Okay, and for euro pound, basically we've got into a weekly rejection block in euro pound. So from Monday we could see probably a retracement. Because remember, we're still in a discount market in euro pound. So we could see potentially see higher prices of euro pound. So let's delete this level. So we don't really need this level. Delete this level, as we don't really need that level. Right. So this is our weekly rejection block. Let me put this right here. So 60-day look back, 40-day look back, 20-day look back. So now this is off the way. Remove this. As we're done with the first week, January, remove this. Eliminate this. And lastly, we remove 6th of January. Okay, 6th of January. Yeah, I was actually wondering why this was actually wrong. 6th of January, and break this down to 13th, which is the next week. Yeah, I'm actually correct. 20th of a week. Okay, so actually this is Monday's price action on the new week on GBP USD, which is the 9th. So remove this. Okay, so here is a daily rejection block. There's a daily rejection block on British pound USD. We've tapped our weekly rejection block, so there's no need for that. We've tapped this level also, there's no need for that. So our next target on the sell side will be this sell liquidity where this candle week rests. Okay. So Euro USD. Let's see. Only for this. Oh, 6 actually. So Euro USD, we can do the 6th or the 9th. Yeah, perfect. All right. So Euro USD 9th, GBP USD 9th, Monday's price action, Euro Pound 9th, Monday's price action. Okay, so for Euro Pound, we've basically taken out all the liquidity of that level. So we could potentially see a retracement of this level. Okay, so we're not going to trade this now, but we can anticipate a retracement of that level. Okay, now let's actually zoom in price. Let's zoom in price. Let's see where could price retrace down into. Okay, so there's a lot of weak off this level. So we could retrace down into this level where support rests in form of fair value gap. Okay, we could trace down into that level and potentially find support of that level to go higher as we're still in a discount market. Okay, so that could potentially happen. And on the upside, there's still ranges to be met. Remember, we're taking a level of a discount array. We're not seeing an opposing premium array for price to reach for. So the question is, where is the opposing premium array we can expect price to reach for? That is this fair value gap, which will be the next level for price in terms of target objective. And also, I want you to note this very clean bodied candles at 0.85. That could be a potential short-term sell liquidity in the marketplace for price to reach for. And let's basically remove this. So sell liquidity. Okay, sell liquidity in the marketplace. All right, so let's see what price actually gives us. So for the new week, all you're simply gonna do for IPD is move your arrows to that new week. Okay, every new week you're gonna move your IPD. That makes things easier for you to reference. For DXY, all we simply want to do is new week, move IPD to the level. New week, move IPD to that level. New week, move IPD to that level. Still, a 20-day low still rests around this level. 40-day low still rests around that level. And there's really no 60-day low to reference. Okay, it's on the DXY. On Euro Pound, there's nothing to reference in terms. All right, so there's actually a 20-day low to reference. There's nothing to reference on the premium side on 20-day basis or on a 40-day basis. But now on a 60-day basis, there's actually a fair value gap to reference on the premium side as potential target for that week. Because remember, IPD would want to trade to reference points in the last 60 days. All right, so for euro, dollar, so basically price went off this level. We could see a potential retracement back into this bullish order block. So that bullish order block could be a potential retracement back into for price. Okay. You see something like this, whereby price dips down to that level, and we see a move higher. Move higher. And also make sure you guys note that there's a fair value gap on the upside to target. So there's a fair value gap on the upside, and that actually falls on the 40-day basis. So on the 40-day IPD data reference point, there's a fair value gap to reference on the premium basis. I don't really have to keep typing everything for you guys to understand that. Okay, otherwise that would just make our charts very confusing. Okay, and confusing with a lot of unnecessary things when I could just easily say that. So, um, 40-day gap around that level, that could be a potential level for an upside for the new week on your dollar and GBP USD. Basically, if we could get a low of the week coming around the sell side, to see a retracement all the way up into this level. But as we're expecting very, very bullish euro pound, we're going to see more strength on euro than strength in British pound US dollar. So our bias for this week is price reaching into this level for us to consider any sells. Obviously, right off the bat, for the new week, we could get bearishness straight down through this level where rest 20-day IPD low. But a very good level to sell would be this level. So let's see what the DXY actually does on Monday, which is the 9th. So does it tap a level or not? No, DXY doesn't tap a level yet. Okay, so Euro Pound, we're looking for some form of retracement, short-term retracement down into our price went higher. No big deal. So no entry on this because we're looking for retracement down for price to go higher. Euro dollar, so we could see retracement down. Okay, no real movement on euro dollar. British pound basically on the 9th, bearishness. On the 9th, no real change, bullishness. So our bias remains, want to see bullishness on DXY for Tuesday's price action before we consider sells. DXY stalling, no real change in price. So that would have been a no trade as DXY didn't do anything. So our criteria for us to take a buy, for price to get to this level before we take buys. Criteria for us to take a buy on Euro USD is for price to get to this level for us to take a buy. Pound USD, a criteria for us to take a buy. So price to trade down to our sell liquidity for us to take any buy, trade through our sell liquidity, potentially give it turtle soup for us to take any buys up into this level. Okay. So our first level obviously will be this bearish order block. So let's highlight that level before we get to our rejection block on a daily basis. So DXY, let's see what DXY actually does. So DXY taps our level precisely and drops down. Okay, so that would have been a trade for that day. Because what the market would have done would be open, trade higher, okay, into our level, and then drop down. So we're actually very, very precise on the DXY. Now, target for the week on DXY is 100.90. That is our target for the week on DXY on a sell side basis. Right, so on Euro Pound, we're still looking for downside before we look for any upside. But our potential bullish target on Euro Pound is this premium level of 0.8850. So that's what price actually does. Okay, so price drops down into this level. Cool. No real change in price. There will be no trade around this level. So let's look at euro dollar. Oh, I think we're 1 day behind the DXY. So this is actually the 11th. That is the price action on the 11th. This is the 11th of January. Let's see pound USD. This is the 9th. So we need to play 10th. Actually forgot about this. Okay, so the 11th. Yeah, so I think we're 1 day behind on euro dollar and British pound dollar. So sorry for that, guys. Now, so this is actually 11th price action. Remember, we wanted to see price trade up into this level before we saw bearishness on DXY. And for British pound USD, we want to see price trade down into sell liquidity and take out sell liquidity before we see bullishness. So we want to see price trade through this level and quickly pull back up for us to see bullishness into our first target of this purple box. And for euro dollar, we want to see price trade down into this other block and trade higher for us to see bullishness. So let's see what price actually does. Perfect. So price taps our level perfectly and trades higher. Okay, so this is precision. This is how you get precision in the marketplace. Look how precisely price taps our level and goes up. So our first target will be 20-day IPDA. And for British pound USD, you want to see price trade through this level and trade higher. So let's see what British pound USD does. Perfect. Look how precisely we tap our first target objective. This is surprising. Wow, this is precision. So we tap our sell side liquidity and straight up went through to our first target exactly as we called price out. This is actually perfection in trading. So this is Wednesday's price action for this week. Okay, so now we can anticipate a continuation of sells going into Thursday to reach 100.90 as our overall sell side target on the DXY. And for the euro pound, we could potentially see bullishness from this level as this candlestick's high is providing some form of support for price. You can see a daily compression candle. So we could see bullishness of this level on euro pound. Okay, so let me actually make this more of a zone so you guys can actually see this clearer. So we do this. All right, so what we're looking for is support of this level, okay, into that level. Premium array target on euro pound, euro dollar. We want to see price reach our first target objective, which is a 20-day IPD high, where liquidity will be resting. And then for British pound USD, the next target obviously would be basically price hasn't fulfilled this box yet, but I want to see price trade through this box and potentially into this rejection box. Okay, so now let's see what the DXY actually does for Thursday's price action. We want to see continuation to the downside. And perfectly, we tapped our target. This is actually precision. This is precision in trading. All right, so for euro pound, let's see what we actually do. This is what 10th, 11th. Okay, let's see if we're actually in line 12th. All right, so we're correct. Let's see what euro pound does. Perfect. So we see bullishness on euro pound off our support level. Look how we're using, this is actually mind blowing. We're using daily time frames to get precision levels. This is mind blowing. This is mind blowing. Using our daily time frame to get precision of levels. Okay? There's actually a lot of content being dropped right here. No one else teaches that. Using daily levels to get precision entries. Okay, so euro dollar, we've seen a rejection of this level. The first target is this level and potentially that level. So let's see what euro dollar does. Perfect. Look how price taps our level perfectly. And then finally, British pound. Let's see price trade through into that box. Okay, into that box. Want to see price trade through that box. And we traded through the box, not really getting to our profit target objective. But we've seen bearishness on pound, US dollar. So, as usual for Friday, we could see a potential corrective market structure on Friday, as we saw the last Friday. As oftentimes during your weekly ranges, Friday will be the corrective range to fulfill the weekly range profile. So you wouldn't want to really expect much movement off of Friday's candle. Okay, so this is why oftentimes on Friday, that's why I say take profits. So for euro dollar, I'm not really looking for anything. I feel like we could see a retracement of this level for euro dollar. Okay, you can see a retracement of that level for euro dollar as we've met our target. So I'm gonna remove this. We met our target. So for British pound, US dollar, we could see potential bearishness if we're expecting slight correction on DXY. So we're looking for slight correction. So we see bearishness of the open of this daily bearish order block. Okay, so you can see price retrace into that open and then drop down. Okay, so you can see price retrace into that open, then drop down. Our next sell side target will be that level. Okay, this candlestick's low. The next sell side target. Can delete this off, and also delete this off. So that candlestick's low will be the next potential sell side target with a retracement of this level, and then euro dollar, see retracement of that level, all the way down into this clean body candles, where most retail traders would want, most retail traders inside this bullish move might want to throw stop losses at. So there's sell side liquidity resting off that level. So let's actually about this. Sell liquidity, okay. The sell liquidity of that level, and euro pound, I'm looking for a very bullish move into this level. So if this were Friday on euro pound, I would still be in this move, trading this move, looking for this level. I get stopped out, no big deal. Stops will be at break even already, as we already had a very bullish range. So even if price trades back down, we'll get stopped out at break even. So our target on the premium side is this level. That was where we expect our weekly highs to form. Okay, so let's see what the DXY actually does. Perfect. This is actually perfect. So price trades back into our level. Euro pound, we're looking for higher prices. All right, so no real change on euro pound, no big deal. Euro dollar, we're looking for retracement to the downside, to sell side liquidity. Okay, so right, so no real change in price. Price didn't really trade higher or trade lower. So this will be a very small range day. This is why I said we don't trade on Fridays oftentimes, as that would be where the weekly range profile would be fulfilling. So the only trade we're on this Friday would have been on euro dollar, and that would simply be holding our trades off Wednesday, where we call this very bullish range. Okay, so pound USD, no real change, so that's cool. Yeah, cool. No real change. We're still looking for downside potentially. Right, so new week, new setups. This is the third week of January, and then we have one more week to go before we end this call. So new week, new setup. Remove this as price as traded through the weekly level. So sell liquidity of that level, the support of this level. And I just want to point your attention real quick, guys, to something. Look how price reacted off this candle. So that could mean that on Monday we could see the market could potentially gap into our target. Because remember, we were in this buy side move from Wednesday. From Wednesday. Okay, we're around this low. That was where we took this buy move. So we could potentially see a gap into our premium level, because that is where the central banks would want to offload their buys from this turtle soup swing low. Remember, the reason why we're expecting the market to trade higher was via this turtle soup, because sell side liquidity was grabbed via this turtle soup. So if the market is moving off a discount level, we're looking for an opposing premium level for the market to reach for. All right? So we simply move our arrows to the new weekly range. Okay, and we can see a potential gap into this target, upside target, okay, on price. Euro dollar, we see potentially. Mondays we don't trade anything. We're not what do you call these people? Fortune tellers. Okay, so don't want to fortune tell price. We're not trying to predict the future. We're only trying to analyze what we see in price, what we expect price to do. So for Monday, we're going to see out of euro dollar, and if we're going to expect euro pound to be very, very bullish into this level, a potential gap. That's what I'm saying basically. we could see British pound fulfill this downside target and even trade down to this point. So we could potentially see a gap all the way down to this point to clear out sell side target. Uh, were we in this trade for a sell? No. The only trade we're in is euro pound. So we're out of euro dollar, we're out of British pound dollar. So anything the market does not really affect us as we're out of that trade, except from euro pound where we're still holding when is this entries at. Okay, so for the DXY, you see potential bullishness. Let's actually see what the range is doing. We tap this level. We can see potential bullishness on the DXY. And also, I want to point your attention to something real quick, guys. So let me remove this zone. So just taking out that zone. So for the DXY, there's equal body candles inside this range. Inside of that range, equal body candles. Okay, so buy side liquidity would rest off that level. So let's level this buy side liquidity. Or let's just call this buy liquidity. Okay. Buy liquidity would be inside of that range. And the next sell side target would be this low. So, oh, not actually that. Okay, damn. So next sell side target would be equal body candles rejection block. Okay, so that would be a 60-day IPDA rejection block. Well, actually a 40-day. This actually still falls under the 40-day IPDA. So that would be a 40-day IPDA rejection block as our next sell side target. Price has taken out that level, so we don't really need to see price react at this level. So what we could see price do is could see price trade through to sell side liquidity, charges to that level and potentially drop, or we could see price trade to this bullish order block. Let's indicate a line there. But now we know institutional order flow is bearish. Why is institutional order flow bearish? DXY, because we keep failing to make higher highs and we keep respecting bearish order blocks. Okay, so this is a simple way you can determine institutional order flow. Okay, so that's what I'm looking for. I'm looking for a gap into this level. I'm not trading this for now, but I want to see a correction to take out sell side liquidity potentially. And what else? British pound USD, nothing, looking for a price to trade down lower into this level. So let's actually move this. All right, so let's see Monday's price action. Let's see what price actually does on Monday. Let me actually remove this because you don't really need this anymore. So Monday's price action. Okay, so price made a corrective market structure up. Until we get into this range, we're not looking for any action to take on the opposing pairs, which is euro dollar or British pound dollar. So for euro pound, let's see if we're actually correct on this. Let's see what happens when the market. Damn! Wow! Wow! Let me actually remove this. Wow! Look how wow. This, guys, is institutional trading. This is institutional trading. This is mind blowing. We predicted a gap in the market. That is mind blowing. That's actually crazy. Wow. Wow. All right. So looking for bearishness on euro dollar. Monday, you can expect that, but we're not trying to trade that. Remember, euro dollar. So we could find bearishness as we expected. We could see price potentially trade lower due to very strong euro pound. Wow, as expected, we traded through on GBP USD. Nice. So so we basically grabbed this liquidity off that level. Okay, so remove this. That is something we can reference in terms of. So going back to DXY, until we get into that range, we're not really looking for trades. Okay, so nothing to be traded on Tuesday until we get into that range, and we can see bearishness. So this would have been a no entry for us on DXY. And Euro Pound, we could see some form of retracement of that level potentially, as we've now met our premium target. So we could see price stall around this level a bit before we trade down, as we've met our target. Okay, and we target this level basically for sell side liquidity. So we simply clone this level and pull sell side liquidity of that level. So this is where we can see the market trade to off this gap. Potentially, euro dollar should actually sell side liquidity on euro dollar. So let's clone this. It's also a bullish order block. Let me actually do this. Okay, so that is the mean threshold of this bearish order block. So this is the mean threshold of this bearish order block. And this is the sell side liquidity of that bearish order block. So we could see potential bullishness. If this was an actual day to be traded, I would be buying off this level. Should price get into that level, I'll be buying off that level, and my stops would go just below that level. So my stops could be like about off the daily, could be about 26 to 30 pips, and my target would be this level. Okay, the target will be 1.0700. So let's make that target. Okay, 1.0700 target. So this is what I'll be looking for Tuesday. Into off this line. Okay, and pound USD. So basically, we're looking for a bearish pound from this level. So I feel British pound US dollar will be stronger than euro dollar. So we just took out a swing low. Price may not necessarily get to this last week of this level, but just as a side note, there's liquidity of that level. Okay, so I'm not sure yet, but I want to see the market trade through, and my first target would be this level. Okay, and the 20-day IPDA high would come off this level. So let's make this straight for you guys. Okay, so straight. That will be buy liquidity resting around that level. Let's call this buy liquidity. Okay, and then we call this buy liquidity. To remove this point as price has traded through that level. So we don't necessarily need that. Although in Euro Pound, as price just got there, oftentimes when price wants to make a reversal, we would not want to see a straight away reversal of that level. So we could stall around this level for about a day or two before we see potential move. But the goal is we want to take positions around this level as we're now in the premium market to potentially reach for sell side liquidity. Euro dollar, if we're expecting the Irish pound, could potentially trade off this level to see buy side into this level, and the British pound US dollar can see a retracement back up to take out the buy liquidity of 1.200. So now let's see what Euro pound does. Okay, so let's see. All right, so we've taken positions of that level, around that level, and our target is met on euro pound. Okay, so if we're taking trades of this level, that would have been a very, very good trade. And euro US dollar, looking for higher prices. So price did not get to our entry level, so this would have been a missed trade. Although price got to our target objective level, there's still different means basically to get this trade using buy stops, using intraday candles. But our goal of this lesson is for higher time frame analysis. So this would have been a missed trade, euro dollar, and then for this, looking for price to trade through this level. So that's what the market does. Wow, the market straight up blows through our two buy side liquidity. So this would have been a very, very huge move. This is how many pips? This is a 380 pip move in one day. That is insane. That is insane. That is insane. 380 pip move in one day. So this is actually Tuesday's price action. Okay, Tuesday's price action. And on the DXY, we just tapped. Actually, our entry was missed on DXY. Entry was also missed on euro dollar, but we're able to get an entry on DP USD as we're looking for this level for bullishness, and we're also able to get entries of euro pound. So for the DXY right now, we've just tapped through this level. We could see price potentially stall around this level before reaching for this level. So that is important to take note. Uh, so we call body candles off this level. For those retail traders trying to follow this sell move, there will be buy liquidity off that level. So it's important to know that. Also, this is a bearish order block, but I believe we could trade through this level and tag buy liquidity. But what we want to see price is want to see price tap this level basically and see what price does next. So for DXY, currently this is a Tuesday candle. I'll rather sit out of the marketplace. But what I want to see first on the sell side basis is 100.14 being tapped potentially before we make a potential reversal back into this bear candle. Or we could even just straight up plow through this level into 99.43. Let's see what the market actually does. Euro pound, we've tapped our level, the holding cells from this top. Sell side liquidity has been tapped. Okay, so now there's a fair value gap in the marketplace that we want to see price fill. Okay, fair value gap, fair value gap. So for now, we're going to stay out of the market as there's nothing to reference, and it's just what the market does. On euro dollar, there's nothing to reference actually in the market, so I'll best stay out of the market. And then for British pound dollar, there's nothing to reference in the marketplace, so I'd rather we stay out of the market as we've achieved a 370 pip move in one day. So the next thing we want to reference is our support levels. So where's the next upside target in terms of a premium? Since the market is showing initiative that it wants to move higher. Okay, so premium target would be this fair value gap on the daily. It would also be daily rejection block, sell side or buy side liquidity, sorry. And then we've got a daily order block. If you want to see price keep trading higher, then that could be potential upside targets. And for a level where we could get support at, so this basically is a bearish candle. This is a mitigation block actually. So this is a mitigation block, right? Because this was the last bearish candle before we went through this equal lows, and now price is traded through that level. So that becomes a mitigation block where we can expect buys, retracement into for buys. So this is what I'll be looking for as a level for buying. Okay, so this is what I'll be looking for as a level, potential level for buying. So next target would be 125. Okay. So once you get to that level, we want to look for more buying. And one more thing is more important to note that there's a fair value gap in the marketplace. But I feel this could be a breakaway gap, as the market could just keep this entirely due to this mitigation block and due to the strength of the British pound. Okay, so let's see what the DXY actually does. Remember, our target is 100.14. Uh, so price just straight up never meets that target, goes back up. Okay, British pound, Euro pound, we're staying out of this. All right, so Euro dollar, we're staying out of this also. And British pound, US dollar, want to see price trade into this level if you're looking for buys. Okay, so now a buy orders will have been activated on the daily time frame for um, British pound, US dollar. So for DXY, since we've traded through this level, we look at buy side liquidity being taken before we reach any downside target. Obviously, if we get a breakout of this level, then that could mean potential bullishness in the marketplace. So it's very vital to know that. So what I want to see is price take out this level, then drop. Euro pound. So for Euro pound, I'm looking for a retracement up into this level. If we could find a good retracement up into this level, that would be a good opportunity for me to want to sell more all the way back down as we're in the premium market currently. For Euro dollar, um, if the XY is actually going to be bearish for Euro dollar, we have a bearish order block off this level. Okay, let me actually use this as a zone. We have a bearish order block off this level. So we could see potential bullishness from this zone. Potential buying moves could come from this zone. And our next target would be clean highs off this level. So clean highs of that level. We're already taking out that level, so we don't really need this. The clean highs of this level be our next target for price. Obviously, it's very important to note that your sell side liquidity in the marketplace. Okay, also your sell side liquidity around the zone. So if we're taking any trade, stop has to go below the zone in case price wants to tag sell side liquidity so that we don't get stopped out. And then British pound, we're looking for a bullish move from this level all the way up. So now let's see what our analysis says. All right, so we tap this level, we're showing rejection, turtle soup, perfect turtle soup of that level. We're showing rejections of that level. Euro pound, we only take sales in Euro pound if price trades higher. Let's see what price does. Our price stalls around that level, never makes any move. Euro dollar, let's see what Euro dollar does. Okay, so we tap a level, we've made a bullish move up. Perfect. British pound, US dollar, we're looking for a bullish move. Now we're showing signs that we want to go up. And this is basically Thursday's price action. For Friday, we want to see an explosive move all the way down because there's massive liquidity resting at the bulk of the bodies of this candle. So we want to see a very, very explosive move all the way down on Friday. So we're looking for an explosive range. That could mean very, very explosive price higher on Euro dollar from this buy side we're holding, and British pound dollar from this buy side we're holding. Now for Euro pound, I don't really think price would get to this gap, to this fair value gap. I'm not really sure price gets to that fair value gap because oftentimes you'll see when the market is making a turning point, the institutional sponsorship of that turning point would be so strong that you get breakaway gaps often, unless if price goes into a range. If price does not go into a range, then you're going to see explosive moves and price will barely get time to fill. So we might not really get to that level. And that would be okay. That would be fine with me. Okay, and we could still get very, very massive downside. But for British pound, taking buys on this level, looking for this upside. Euro dollar, taking buys on this level, looking for this upside. Definitely intraday target would be this last swing high in Euro dollar. Okay, intraday target on British pound USD would be this last swing high. If we break through that high, we're looking for the next level. British pound, US dollar. And for euro pound, I'll prefer a price guess at this point. Otherwise, I'm going to sit out this one in euro pound. And for DXY, looking for explosive moves to the downside. So let's see what price actually does. Um, okay, not really explosive, but we got a move to the downside. Bearish move. Euro pound. Let's see what price does. Nothing. Euro dollar. Let's see what price does. So we met our intraday price target old high. Met British pound dollar. Let's see what price does. Let's see. Did we actually meet our intraday price target? So we still maintain our level. Price not really trading anywhere as we've already made a very massive range on Tuesday. So we can expect Wednesday going to Thursday and Friday. It's not really a very huge move. So with that being said, guys, this brings me to the end of January's content, and I'll see you guys next time when I record content for February. With that being said, see you guys in the next session.